Now, if you have not declared your global income, which you have been earning internationally while you are living in Canada, ladies and gentlemen, this is Sajjad Malik. I'm a business and immigration lawyer, a barrister and solicitor in Ontario, Canada, and I'm speaking to you from my office in Oakville, Ontario. The purpose of today's video is to introduce you to the concept of your tax obligations when you become a permanent resident of Canada. What tax implication may occur, what are your tax responsibilities as soon as you become a PR, and what could be the consequences if you have not met those tax requirements after becoming a PR of Canada. The day you become a permanent resident of Canada, whenever you pay your taxes, you have to declare all your income earned abroad, internationally, globally to the Canada Revenue. Now, this income could be income from salary, income from consultancy, income from property, income from speculation, income from interest, or income from capital gain in property. So what happens the day you become a permanent resident of Canada and then you are continuing your life in Canada, you're living in Canada for more than 183 days in a tax year starting January to December. If you're earning some income, you must submit your taxes in Canada to the CRA. If you are submitting your tax, you have to include all the global income which you have earned during that period in your tax return as well. Now, the day you became a permanent resident of Canada, on that particular date, all your assets abroad, if you owned a house, if you owned a property, if you owned a parcel of land, if you owned any stocks abroad or any other kind of assets abroad, from that day onwards, it is deemed that you have disposed of those assets on that particular day. For example, if you had a house which was worth $200,000 on the day when you became a permanent resident, that house is deemed to be disposed of, and then it is deemed that it was sold or disposed of at the fair market value of that asset on that particular day. The Canadian government is not concerned, unless it's a business immigration, to ask you about how did you earn the income in the past. But they, from now onwards, the day you became a PR, that $200,000 onward, now they have a right to tax you if you have made a gain on that particular property. So if you became a permanent resident and all your properties were worth, say immovable properties were worth $200,000, and from that day onwards you made a life in Canada, you did a lot, you earned income, you earned a salary, business, capital gains inside Canada, when that property abroad or those assets abroad are disposed of, suppose at $400,000, then that $200,000 of capital gain, assuming it's a capital property, that amount has to be offered for taxation to Canada. Naturally, there'll be a different price if it is a capital gain. Now, if you have not declared your global income, which you have been earning internationally while you are living in Canada, if you have not declared your assets internationally held when you were a permanent resident of Canada, you have lived in Canada as a tax resident as well, that in future, if the government comes to know of it, which I believe it would very soon, because it has entered into several agreements with other countries where the countries would reciprocally share information of each other's citizens or dual citizens in one country with another country. So tomorrow, whichever country you are from, when that information comes to the database of CRA and they evaluate that you have not declared those assets abroad or those incomes abroad, they can come after you, and then you can have certain consequences. A few of them would be very difficult, and it may go towards there are options, tax code of Canada, which may prosecute a few people based on those charges. Now, if you came a few years back, if you have come right now, you can definitely approach a tax lawyer or a business lawyer to discuss your case with them, to discuss your assets with them, to discuss what different incomes you were not able to declare in the Canadian system, and you were not able to declare those assets in the Canadian system, what can be done within Canada to meet your tax obligations. If you come before CRA comes to know about that, then naturally you will have a better chance to regularize your affairs. If they come to know of that information earlier through any government exchange of information, or through poison pen letters, or through some complaints or some other ways when they're verifying information, then it becomes extremely hard to get them towards your side or to convince them that it was only an innocent mistake. So just keep in mind that as a permanent resident, as soon as you become a PR of Canada, you not only have tax obligations or filing obligations inside Canada, but you are also responsible to declare any global income which you are earning abroad. And if you have any assets on that particular day, those assets are deemed disposed of at a fair market value. And in future, whenever you would dispose of those assets, you have to declare those gains in your Canadian tax returns as well. So if you wish to know more about it, and if you wish to contact us to make us understand your case and to help you in this particular issue, you're most welcome to contact our law firm. Our information is displayed at the end of this video, and we'll be very happy to help you. Thank you very much and enjoy your day.